Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Reynolds Consumer Products Inc. Annual Report. Reynolds Consumer Products Inc. offers a wide range of products across various categories. The company's product portfolio includes cooking and baking essentials such as aluminum foil, parchment paper, plastic wrap, and baking cups under the Reynolds Wrap, Reynolds Kitchens, and EZ Foil brands. In addition to these products, the company also provides storage solutions like trash bags, food storage bags, compostable bags, and bags made from recycled materials under the Hefty Ultra Strong, Hefty Strong, and Hefty brands. The Hefty Tableware segment offers disposable and compostable plates, bowls, platters, containers, cups, and cutlery under the Hefty brand. The company's Presto Products segment primarily sells store-brand products in food storage bags, trash bags, and plastic wrap categories to various retailers such as grocery stores, mass merchants, warehouse clubs, discount chains, dollar stores, drug stores, home improvement stores, military outlets, and e-commerce retailers. Overall, Reynolds Consumer Products Inc. offers a diverse range of products that cater to the needs of consumers in cooking, serving, cleanup, storage, and tableware categories. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of any publicly traded company can fluctuate due to various market and economic factors. One possible reason for a decline in stock price is poor financial performance, such as declining sales or profits. This can be caused by internal issues like inefficient management, lack of innovation, or external factors like changes in consumer demand or competition. Another factor that can contribute to a drop in stock price is negative news and publicity surrounding the company. This can include scandals, product recalls, or other controversies that damage the company's reputation and erode investor confidence. Additionally, economic downturns or industry-wide trends can also negatively impact a company's stock price if it is heavily reliant on a specific market or sector. In some cases, a decline in stock price may be due to changes in leadership or management, such as the departure of key executives or the appointment of new ones with different strategies. This can create uncertainty among investors and lead to a decrease in stock value. Finally, external factors like regulatory changes or global events can also impact a company's stock price if it is not well positioned to adapt to these changes. In summary, there are many potential reasons why Reynolds Consumer Products Inc.'s stock price may have dropped slightly over the past year. While we cannot pinpoint the exact cause without more information, it is likely due to a combination of internal and external factors that have impacted investor confidence and market sentiment. Reynolds Consumer Products Inc. maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Reynolds Consumer Products Inc. trades at a higher price-to-earnings ratio of 16 times and a higher price-to-book ratio of 2.1 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 4.08%. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, investing in product categories and strong relationships with diverse retail partners have been key contributors to revenue expansion. Additionally, robust product performance due to brand recognition and customer loyalty has also played a significant role. Higher pricing due to pass-through of higher input costs and increased demand for innovative new products from suppliers have also contributed to revenue growth. Furthermore, the shift towards purchasing more sustainable products has led to an increase in net revenues. In specific segments, such as Hefty Waste and Storage and Presto Products, higher volumes have driven revenue growth. On the decline side, lower retail volume and mix in certain segments, including Hefty Tableware and Reynolds Cooking and Baking, have contributed to revenue decline. Additionally, negative impacts from regulations governing products that may contact food, extended producer responsibility, EPR, laws, and product labeling laws such as California SB 343 have also led to a decrease in revenue. Overall, the drivers of revenue growth or decline are multifaceted and influenced by various factors, including market trends, customer preferences, regulatory environments, and business strategies. The net income of a company underwent significant changes between 2023 and 2025. In 2023, it decreased due to higher interest rates on unhedged debt. The following year, 2024, saw another decline in net income, this time attributed to an inflationary environment, supply chain constraints, increased regulatory requirements, and costs associated with environmental matters. In contrast, profit margins experienced a different trend. They decreased in 2023 due to the same reason as net income: higher interest rates on unhedged debt. However, in 2024, despite a decline in gross profit margin and net income margin, profit margins actually increased. This anomaly can be attributed to the company's ability to manage its costs effectively. The reasons for these changes are multifaceted. An inflationary environment and supply chain constraints have had a significant impact on the company's bottom line. Additionally, high competition in mature markets has made it challenging for the company to maintain its market share. Product development or launch delays have also contributed to the decline in net income. The stability of profit margins from 2023 to 2025 can be attributed to the company's ability to manage its costs effectively and mitigate the impact of external factors such as inflation and supply chain constraints. However, a slight increase in profit margins from 2024 to 2025 suggests that the company is making progress in addressing these challenges. The company's financial performance indicates a consistent trend of generating positive operating cash flow. According to the provided information, the net cash provided by operating activities has been steadily increasing over the past 2 years. In 2023, the company generated $644 million in positive operating cash flow, followed by $489 million in 2024 and $477 million in 2025. These figures demonstrate a strong ability of the company to generate cash from its core operations, which is a crucial indicator of financial health. The company's debt level has undergone significant fluctuations over the past few years. Initially, the external debt facility's term loan facility outstanding balance increased from an undisclosed amount to $1,586 million as of December 31, 2025. Additionally, the long-term debt rose to $2,125 million by the end of 2025. However, there is also evidence that the debt level has decreased significantly in some instances, with a notable increase in revolving facility from $250 million to $700 million. In terms of interest expenses, the company experienced a decrease in net interest expense from $98 million in 2023 to $86 million in 2024, representing a 12% reduction. This trend continued into 2025, where the interest expense was reported as -$86 million. The significant decrease in interest expenses suggests that the company has made efforts to manage its debt and reduce its financial burden. The performance of various segments within the company has been a mixed bag. On the positive side, Reynolds Cooking and Baking and Hefty Waste and Storage have shown strong results across multiple pages, indicating consistent growth and success. Additionally, Hefty Tableware has also performed well, suggesting that the brand is gaining traction in the market. On the other hand, Presto Products and an unallocated segment have struggled to meet expectations. These segments have been highlighted as underperforming on page 34, indicating a need for improvement and potential restructuring. Overall, while some segments are thriving, others require attention to get back on track. Management is optimistic about the company's outlook despite potential risks. They plan to continue growing and recovering profitability by leveraging their strong brand recognition and customer loyalty. The company will focus on sustaining competitive advantages through proprietary products and manufacturing capabilities, while also promoting a culture of safety, respect, and collaboration. To achieve this goal, management emphasizes the importance of innovation, introducing new products, and developing consumer interest in their brands. They also plan to maintain relationships with major customers and adapt to changing consumer preferences. Additionally, the company will continue to invest in both branded and store-brand products to grow the entire product category. Management is aware of potential challenges such as inflationary environments and supply chain constraints, but they are committed to executing strategic initiatives to maintain profitability and cash flows. They also expect interest in environmental sustainability to play an increasing role in consumer purchasing decisions, and intend to continue innovation in this area. Overall, management strategy focuses on sustaining competitive advantages, promoting a culture of safety and respect, and adapting to changing consumer preferences. They are committed to growing the company while maintaining profitability and cash flows. The company's financial activities have been transparent and well documented. One notable aspect of their operations is the payment of dividends to shareholders. According to the provided information, the company has indeed paid dividends on multiple occasions, as mentioned on pages 26 and 40. In contrast, the company has not engaged in share buybacks. This decision suggests that they are prioritizing other financial strategies or investments over returning capital to their investors through share repurchases. Concerns are emerging regarding the accumulation of excess inventory and disruptions to the supply chain. A notable indicator of this issue is the significant increase in finished goods inventory by $9 million, as highlighted on page 60. This surge suggests that companies may be overstocking or struggling with efficient inventory management. Furthermore, a separate concern arises from the reduced capacity of rail and trucking services, which has led to fluctuations in labor, freight, and handling costs. As mentioned on page 30, this situation could potentially disrupt supply chains, leading to delays and inefficiencies in the delivery of goods. That concludes the financial summary for Reynolds Consumer Products Inc. Feel free to comment below, and I will be happy to answer them when possible.